This is starting the internet at 5 million IP users and crypto at 5 million wallets. And what we saw is the internet, which was the fastest adoption of technology the world had ever seen, it grew at 76% a year and then slowed down after year 8 to 43% a year. Crypto has been growing at 137% a year. It's now at 516 million users versus 187 million of the internet at the same stage. And then what we did is assume that crypto just slows down its growth to the same as the internet. I don't think that's going to happen. I think it'll be faster. But it gets by 2025, the end of 2025, we get to 1.1 billion users. So that'll be double the pace that the internet grew.
The Bitcoin network processed its 1 billionth transaction at 9:34 p.m. UTC on May 5th, a significant milestone for the world's leading cryptocurrency network. Clark Moody, a website tracking Bitcoin transactions, shared its dashboard on social media showing the crypto network processed its 1 billionth transaction exactly 15 years, 4 months, and 4 days after the first Bitcoin block was mined on January 3, 2009. According to renowned macro analyst and former Goldman Sachs executive, the cryptocurrency industry will record another important 1 billion milestone in 2024. In a tweet shared last month when the crypto market was experiencing worrisome price declines, the Real Vision founder and CEO wrote, "On days like today, just remember that crypto is still being adopted at twice the speed of the internet and should reach something like 1 billion users by the end of 2025. About 2 weeks ago, independent Bitcoin analyst Willy Woo also shared similar predictions on social media platform X. The analyst's tweet reads, "On track for 1 billion crypto users by the end of 2025, an extrapolation of many independent prior studies in this chart. Binance estimates that 65% of crypto users hold Bitcoin." In a follow-up tweet, Wu notes that users refers to unique KYC users identified as unique entities derived by forensically clustered addresses, taking into account capital flows between addresses. While other analysts and analytics firms believe the milestone will take slightly longer to achieve, with many predicting 2030. Instead, almost everyone agrees that we are close to hitting 1 billion cryptocurrency users worldwide, an important milestone that analysts say will cause significant price appreciation for all digital assets. In a recent video broadcast shared on his Real Vision platform, Pal shares his outlook on macro conditions and how they impact the cryptocurrency market. As we bring you clips from the video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for tuning in and enjoy the video. Today's video has been brought to you by CyberGhost VPN, a fast and secure VPN service offering comprehensive digital privacy. In today's world of widespread cyber espionage and spying, your privacy is never assured online. Whenever you click on a link, go on social media, or shop online, you risk huge privacy breaches that could get your account information, passwords, and other personal data into the hands of rogue players. However, with CyberGhost VPN, you can browse the internet freely because you are assured of full, comprehensive online anonymity and privacy. CyberGhost is a strong virtual private network service that offers blazing fast browsing speed, public Wi-Fi protection, full encryption of all your data. Neither Prying Eyes nor CyberGhost itself will have access to your IP address, browsing history, session duration, and other vital information. It is currently available in over 100 countries, with over 38 million users and an excellent rate on Trustpilot. CyberGhost is offering savvy finance viewers a rare opportunity to secure up to 7 devices with just $2.03 per month, with 4 months free and a 45-day money-back guarantee. CyberGhost works with Windows, Mac OS, Android, iOS, and many others. You can finally access geo-restricted content from websites, including YouTube, social media platforms, and over 40 streaming services like Netflix, Hulu, Amazon Prime, Disney+, and many more, and find better deals online, all while staying completely anonymous. Please click the link in the description box below to enjoy the amazing offer and start the journey toward complete online privacy.
So firstly, we observe that over time, the trend rate of GDP growth has been falling in the United States and all around the world. current trend rate of GDP growth is about 1.75%. Why is it falling? If you remember, trend rate of GDP is driven by three key factors. 1, population growth. 2, productivity growth. 3, debt growth. So let's address these three factors. Firstly, let's have a look at productivity. Productivity has been declining over time as the workforce has been aging, and that lowers the trend rate of GDP. Debt, on the other hand, has been rising. But what we find is that household debt growth actually stops in 2008 because the banks just stopped lending to people, so it's just harder to accumulate debt. Also, corporates have also been paying off debt and have really not been growing as fast as GDP, but really a lot of the debt growth is now driven by the central banks, as we all know. Currently, the US is running massive deficits and is financing it by issuing yet more debt. But the key thing here, the thing that drives everything for the everything code and the world around us, the return on assets, the inflation, everything is driven by demographics. So here's the working age population, aged 15 to 64, trend rate of growth. It's been declining over time as the population ages. Those people are less productive. The older you get, the less productive you are. They had borrowed debts in their early years and now are debt tapped out. So this explains a lot, and I've talked a lot about this on Real Vision in the past. But we can also project forwards. And if you remember my piece about the retirement crisis, I've been introducing this chart for a while, which is the labour force participation rate versus the deaths rate. This is the births rate going forwards by 14 years. And obviously the birth rate drives how many people in the labour force over time. And it suggests that participation in the labour force should continue to fall over time. Now, we've had some pickup as part-time workers have come back into the workforce because people don't have enough money, and we'll see some of that too. But over time, we're going to see the labour force participation rate falling because the replacement of new people in the population is not as much as people leaving the workforce. And that is the problem that slows economies. It's affected Japan, now affecting China, South Korea, Taiwan, and most of Europe. So anyway, that is the megatrend. But this megatrend has some special qualities. When you strip everything out, and I keep saying demographics is everything, you find that the labour force participation rate is exactly mirrored by US government debt as a percentage of GDP. So what it says is as the less people in the labour force, the economy slows, but there's all of the services to pay for the old people, the government debt increases. That correlation is stunning, and that is an incredibly powerful chart to understand the world we live in today, why governments keep issuing debt, and eventually why they're having to print money to solve it. It's all a function of population. So what they do with that debt is they add liquidity into the system. That's the debasement of currency that I've talked about. And you can see the correlation between Fed net liquidity and the US government debt as a percentage of GDP. They're basically the same thing. Yes, the scaling's different, but overall, the trend is the same. So they're using liquidity to pay for the growth in debt by debasing the currency. It's called financial repression.
According to the former Goldman Sachs executive, 2024 begins the debt refinancing part of the 4-year economic cycles for the Federal Reserve and other major central banks. This means these central banks will need to end their quantitative tightening policies and embark on some much-needed easing to service their massive debts. Powell explains that the debt refinancing cycles and perpetual monetary debasement are all a part of the everything code. The other part of the code is how each asset class responds to the constant monetary debasement. According to Powell, only 2 assets have managed to and will continue outperforming. They are crypto and technology stocks. However, cryptocurrencies have a huge edge because of the 4-year halving cycles, which align perfectly with the business and US election cycles. In 2024, we get everything all at once: a Bitcoin halving event, rate cuts, and provision of monetary stimulus to ease up economic conditions leading to the election and help the Fed service the nation's massive $34 trillion debt load. For PAL, this means a crazy appreciation in crypto asset prices. Let's get back to the video.
The other stark thing that we found in the everything code is actually the real mechanism is that most of the government debt increase is just paying interest on existing debts. They're not actually borrowing a lot more to invest in the economy. It's basically servicing of old debts. And so there is a very strong correlation between the interest payments from the previous cycle and then the liquidity for this cycle. So i.e. they issue new debt, it comes up for renewal, they've already been issuing new debt again this cycle, so to pay for the interest payments from the last cycle, they debase the currency via the Fed liquidity, so they're increasing liquidity into the system. Now look at that curve, that's the expected path here, driven by the interest payments from the pandemic debt, which was a huge increase in debt. Now, this debt keeps compounding, obviously, because you're adding debts on top of debts on top of debts on top of interest payments. So I don't expect it to play out fully like this, but we should expect a big increase in liquidity going forwards, and that's crucial to the theory. You see, look at that trend of total liquidity. Think of it, again, in a different world. That is the ongoing trend of debasement of currencies. That, when you debase the currency, gives you an optical illusion that asset prices are rising. So this chart of the NASDAQ versus the total liquidity index shows how correlated they are. It's actually 97.5% correlation. Now, the NASDAQ actually outperforms this because it's a secular trend. But this debasement explains almost all of the movements of all assets over time, which is why everything is so correlated. Yes, some things lead, some things lag, but this is the crucial chart to understand. The answer to the demographics is more debt. The demographics is causing a slower economy. And to get over that, they issue more liquidity, debase the currency to pay for it. That makes asset prices rise. This is the everything code, and it's really important. This is the global liquidity index from all the major central banks. It's growing at an 8% annualized rate. Now, once you add in global inflation, and let's call global inflation about 4%, you've got a 12% hurdle rate for any investment. Now, that's pretty staggering, because if you think about the S&P 500, it does about 12% a year. So basically, you're not getting ahead by doing it. Your savings aren't accruing future value, just present value. This 12% hurdle rate is a huge problem for people if you don't understand it. You are basically getting poorer if you don't hit your 12%. So if you're just investing in bonds and think it's a good idea to get the 5% interest, well, your future self is getting poorer. When we talk about crypto, I use the charts of Bitcoin here because Bitcoin has the longest price history. It too is stunningly correlated with global liquidity. You see, Bitcoin has an 87.5% correlation, not as high as the NASDAQ, because, as you can see, it's the periods of outperformance that lowers that correlation. When we start to get, full kind of mania, crypto mania cycles that you get in this exponential asset, because it is a much more exponential curve, because it's driven by tech adoption. And we'll come on to that in a second as well. But you can see that liquidity is the driver of Bitcoin plus technology. But when I look at Bitcoin versus global liquidity, it's outperforming the debasement by 105% a year. I mean, that's a staggering difference versus global equities, which are not doing anything at all and are probably negative. That's a huge, huge difference in your future purchasing power, which is why this is such an important asset.
Thanks for watching the video, and much gratitude to our sponsors. Remember, there is a very special offer in the description box for you. CyberGhost VPN is fast, secure, totally risk-free, and offers top-notch data privacy at only $2.03 per month with 4 months free. So, please check it out by clicking the link. Thanks. Meanwhile, Willy Woo has another exciting prediction for Bitcoin. In a tweet shared earlier today, the on-chain analyst predicted that Bitcoin will hit $1 million per coin within the next 10 years, and subsequently become a reserve currency. The tweet reads, "What a time to be alive. Bitcoin at $1 million will happen easily in the next 10 years. The follow-on impacts will be long-lasting. Bitcoin becomes a reserve currency, a purge of central bank corruption. Wars become expensive. Younger leadership building for a future they will live in." In another tweet, Wu quotes one of his tweets from 2021, where he predicted that by 2024, it would be political suicide to be anti-Bitcoin. Wu's prediction and recent events brings to mind how much the cryptocurrency industry has evolved and grown in the United States over the past few years. Before 2021, no one could have imagined the crypto industry taking such center stage in a USC presidential election, yet here we are. A few days ago, while speaking to a group of supporters who invested in his latest NFT collection, former President Donald Trump openly expressed his support for cryptocurrencies, emphasizing its importance in modern finance and politics. In addition to the vocal support for cryptocurrencies, Trump also announced that for the first time, his campaign will accept cryptocurrency donations. Though Trump previously showed some skepticism toward Bitcoin, his recent statements have made him more popular among cryptocurrency investors, and Biden, whom Trump made fun of during his speech, less popular. Will you allow a candidate's views on cryptocurrencies to impact how you vote in November? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.